Good evening, this is Rodney with the Triton Wave Market Outlook for Monday, July 14th, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. And your statement of disclaimer. Okay, let's start off by looking at the S&P futures, the ES, pound F, which is the continuous Globex pricing. I did take a 2-month sabbatical from doing these waves. So it's been since May, about May 14th since I did the last one. It's always good to take some time off to get a new perspective. In the meantime, I have updated these Triton waves, and we're now on version 5.0 or 5.5. And they're more efficient, they're more accurate, and I think we left off, and at some point in the near future, I intend on licensing these out for personal use. Okay, so the last time we left, this is like 1 month, 2 months, we were about here, and I actually thought this was going to be a left shoulder, two left shoulders, a peak, and I thought this was going to be a right shoulder. Apparently, the stock market had other ideas, and I got stopped out right about in here. And like I said, I took a sabbatical, so I'm just watching these and trying to time it more accurately. It looks like right now the S&Ps on the daily, this is, again, these are Triton waves. This is Triton wave number 1, number 2, number 3, number 4, otherwise known as T1, 2, 3, and 4. And this is the latest updated version. Okay, so we've taken off above zero on the daily, and it's continuing the trend of what's already above zero in T2, T3, and T4. All right, let's move this out a little bit, and we can see that this first move back in last April was the peak. This was like the big move up, and then on succeeding, when it was a non-confirming top, the S&P sold off between 1466 down to this minor Triton wave down to 1338. All right, the next time there was a non-confirming top, and this actually was a non-confirming top with the one in March of last year, and that sold off from 1683 down to the 144, which is 1555. Okay, then we had this peak and another non-confirming top, and you can see from 1846 down to 1746, about 100 points. Okay, so now we have, now even though this is back above zero, we do have this non-confirming top between what happened at the beginning of January in 2014 and right now. So this could actually keep moving up. We need a confirmation of a few more bars in an up direction to nullify the lower high. But there's no reason, since this is expiration week coming up in July, I believe it's expiration, yeah. Next Friday is expiration week. The momentum is with the market on the upside right now. All right, let's break this down and look at. Let's take a look. If you are a day trader, there's some really sweet plays in here. You just go back. You know, this is a 987 tick chart on the left. This is a 144 tick chart on the right. And if you're just trading this on a daily basis, actually, let's look at this other chart and blow this up to a 987. It's a lot easier to see. Okay, several days ago, when this started going up, now this is Let's get a drawing tool in here. Oops. Ding, color, arrow. Okay. All right, so here we have above and above. On the 987, sometimes it's okay to follow the wave T1 above and below zero, and sometimes it's not. And when it's skimming along the top like this, you have to move down to a lower time frame in order to capture these. These are about 4 or 5 point moves, but you're never going to catch these on a 987. You really have to go down to the 144, and I'll show you that in a minute. But when they're rising above like this, and then they immediately go down, and since this one never went completely below zero until it reached here, these are good endpoints. Now you're not going to get the rarely, maybe on a 144 you'll see a move that's right at the top, but more conservatively you'll get it right here or on this move being about right in here. And that's good for about, well, as it was, that's good for like from 61 down to 45 in a relative short period of time. Now, as it happened at 3:30 in the morning. So if you're up, kudos to you. If I'm up, I'd make calls at that time for anybody who's awake. And you either take this when it starts, and you either take this in here when it starts curving up, or you wait till it crosses the zero line right about in here. So you're capturing 80% of this move right in here. All right, let's look at this on a 144 chart. And let's see if we can, okay, so when it's slow, like on Friday, sometimes the moves are okay, sometimes they're not so great. What you're doing is playing on the very short time frames, you can play T1 or T2. So let's look at T1, get a drawing tool here. And let's look at T2 because T1 is going above and below zero and looks like it's going to stop you out. And what you have to do is examine these pretty regularly to see, depending on the time of the day, if it's really, really slow and it's nighttime, then sometimes you can use the 144. But if it's really moving very rapidly, you have to use either T2, T3, or T4, and sometimes you have to go to a longer time frame, like a 377 or a 987. All right, so let's look at this right in here. This looks like a good entry because it stayed below zero here as this one goes down. So you basically are looking and seeing historically, yes, in the rear view, but it's short time in the rear view, and mostly they keep their patterns for a while. So you're in at this point, and this is I'll go back and look at the prices afterwards. You're in here and you're out here. Now I think this happened like the day before yesterday. So you're capturing this move. Let's just see what that move is here. This is about 1954 to 1957. Now you're not gonna get much on a 144, but this is from 8:50 in the morning until 9:33 in the morning. So you're making 3 or 4 points in a short period of time, and let's move this out here. You can also 1958 down to when it hits a double bottom here. Well, this is 1956 unless you wrote it out. But if you know it's a 144 and you know it's a very short term, if you have 2 or 3 points, just take it and get the hell out. That's the idea of this, just to capture 2 or 3 points and let somebody else have the rest of it. Unless you're playing the longer term ones, which are like the 987 or the 13 minute. I'll show you that in a minute. All right, so in the case of the longer term one right here, you would use the short term T1 because this had a nice belly drop while T5 was still hovering around zero, not half under, half over. And this as an entrance point at 1955. Let's see here. Bing. 1955 and change. Right in here based on this. And you're riding it up to here. Now this actually happened during the daytime, but it was very, very slow trading. And this is a 3-point move, and that's the object of the 144. All right, if we move to a 987, we'll look at bigger objects. We'll look at bigger swings. This swing is on a 987 back here. Your target, since this goes below zero, and this is a and this is the 987 right here, 24-hour chart. Then when it goes below zero at 1962, right about in here, then by the time it comes all the way down to here, you're looking for, these are like 5-point moves here. So when the 987 moves below zero, then just if you were looking from here to here on a 144, it would kind of look like look like this on the waves, and you can play them, but you can go, like make yourself crazy doing it. So I just like the idea of playing this and having a target of, having a target of 10 points and just taking it and get out. Wait until the waves move up again. Wait until the wave moves up again right in here, which is actually here, or when it's completely above zero. It's kind of like almost the same. You get a little bit better price. One's here, one's here. It's a 2-point difference in price. And then riding this up the whole time. This wave is above zero, and that is another 10 points. And that happened over a period of 4 hours. This one happened over a period starting at 2 o'clock in the morning and ending at 8 o'clock in the morning. So you got 10 points down, 10 points up. Some of it is middle of the night trading and you're not going to be there, but sometimes you can put prices in place and targets in place, and you wake up and you're a lucky winner. All right, let's look at the 13-minute Globex price here. Okay, so when the market started going way down, now you missed it on the upside here because these are like longer, tougher waves, but on the short side you did not miss it. On the short side, actually, you got in a little bit early. So if you miss, if you're looking at this and this is going up and this isn't quite, this is moving, curving up to the upside, you want to go to a lower time frame. I'll look at that in a 5-minute one. But right now, let's look at this on the downside right here. You are in a little bit early. You're going to be 2 or 3 points against you. But this happened, I believe, at this happened at 10 o'clock in the morning, July 9th. This is actually during the holiday, but it was Globex trading, so somebody was trading it somewhere in the world. And it moved against you 2 points to 1977, and then it had that nice move after July 4th to 1967. So that was a nice 10-point move. And you're riding it along here, and one of the things you're looking for, and I'll blow this up a little bit, is along with the waves, you're looking, or I am looking at the crossover between the 21 and the 55 EMA. So that happens here, which confirms the crossover to the downside, the 21, and then when it crosses the 144, it confirms it more. Okay, all this move down, the 21 never crosses back above the 55. So as long as that stays down, and as long as these waves are below 0, then this move is still in play. So let's and this actually moved down here, but if you look at a 5-minute chart, it looks a little bit different. You actually can nail this right. The 5-minute chart, it starts curving up. It starts curving up a little bit on wave T1, and it gives you either an out to close the position or an out and an entry. But in the 13-minute, let's stay with that. It gets you back in at 7:45 in the morning on the 7th, or on the on the 9th, on July 9th. Bing bing, right here. Right here. And again, if you're looking for, you're not going to get 10 points out of this one. You're only going to get about 7 points. But again, what you're looking at is, even with these waves up like this, since this is a 13-minute, it's valid. And if you're using a 144 tick chart, then the move of the 21 against the 55 on a 144 tick chart is going to be maybe up and down, and it may drive you a little bit crazy. But on a 13-minute or a 21-minute or a 55-minute, when these cross, they're legitimate crosses. So when the 21 crosses the 55 right here, right in here, that is an exit point on the upside. That you should be closing your long positions. So you can either wait for this to go down below 0, which is too late, or because this is already peaked out and is moving down like this, then you can take a position, and you can take a position when the 21 crosses the 55 on the downside, and they're both below the minor Triton wave. This is the minor Triton wave here, and they've both crossed below the minor wave, and they've crossed each other to the downside. And then you use this for a confirmation. So let's see what happened here. Now this spiked right up again. Now if we let's make I'm going to make a marker on this. Let's see here. Tools, lines, vertical. Let's see where this. I'm going to make a point right here with this line. Go back to a 5-minute and see where that is on the 5-minute. All right. So on the 5-minute, it started to curve up a little bit. It took you down. Actually, this is more accurate than the 13-minute, because the 13 minutes is a little too long, but this got you in at about 1960 and got you out at 1965, which is not a big deal, but profit's a profit. Okay, but getting back in here and just looking for, you're looking for 10 points, you got it right here. So as soon as you get 10 points, you take off half and just trail the stop, and you probably would have made it somewhere down in here. Now, if you waited for this to cross, it was an okay trade, but it wasn't great. You made it from here to here instead of taking half off, trailing stops, and making it to here. So that's the way that's like basically trading, but protecting your profits at the same time. All right, let's look at some. All right, let's take a look. Let's take a look at Apple with the 5.0 version of the Triton waves, and you can see that this is a very nice entry right in here, right at the highs, or a little bit below the highs. Like 20 points. But this is 95, and this was like a 10 for 7 split. Or 7 for 10 split. But it kept you, whether you're using a 13-minute to trade it, a 5-minute to trade it, a tick chart to trade it. The idea was that it was going down and down until it crossed right here. Now, this idea, now that it changed on July 1st, right here, last year, it has been on an upswing. It doesn't mean that it's not going to have you know, like 2 months of spazzing and going down like this, or 1 month of going down. But it does mean that it's on an uptrend. So if this is in your 401k or any kind of retirement plan, and you don't want to look at this every day, you look for this to confirm, and as long as it stays above zero, and you look for the T2 to confirm, you look for T3 to confirm. Now T4 is still on the negative side, so it is subject to pullbacks. But Apple right now, let's look at the 13 on Apple. Okay, now we have to change this time to, hang on a second. I was changing the time back to regular day trading, regular daytime trading. All right, so in the daytime trading, again, it's going sideways right here. This is a 13-minute, 8:30 Central to 3:20 Central. That's military time that I'm used to looking at. Okay, so it takes you down. This is above and below zero. This is above and below zero. So you want if you want a cleaner move, then you're looking at a 5-minute chart, and actually a 5-minute chart will get you in about here. And then you look for a 13-minute chart to confirm. Okay, on the way out, you want the same thing. When this starts getting when this is deep and it's still going down, when this becomes shallow, you look at a smaller time frame chart to get out, or you just wait for this to go back up right here. So this was approximately, well, it's a 2-point move. It's a 14-point move on the old Apple, or actually, yeah, it's about 14-point move on the old Apple. And now this has gone above zero. It's confirmed this, and it's starting to confirm this. So it looks like Apple's trending up. And if we go back to the daily, let's look at the daily once more. Or actually, let's look at the 55. Let's see what we get. It's about the same thing. If we look at the daily, the way this is looking, it looks like there's a possibility that this is just going to peak. This is going to go back and test 100, which was about 710 on the old charts. Okay, so on Baidu, this is a daily chart on Baidu. Daily chart got you in right here at about 93 back in May of 2013. Confirmed it in July, confirmed it again in October, and it confirmed it again in March. And this is just like a straight up move. This is something that you can put in your Keo, IRA, 401k, whatever you have, and walk away from it. You don't have to worry about, you know, like 10-point moves, 20-point moves up or down, because this is completely above zero until it gets to here. And then this is what you're looking for on your chart when they become available. And these, as I don't know if I mentioned before, but I'm going to start marketing these for individual use. And you're catching very near the high, and that is a double to you for less than a year, which isn't bad. So at this point, you can either wait, excuse me, you can either if you're shorting it on a very short-term graph, and we'll look at that in a minute, or you're just a long-term player, this is where you want to exit. Okay, on a let's look at a 13-minute. Let's mark this. Whoops. Um, let's mark this right here of when it went down on the daily, and then we'll go back and look at it in the 13, see if we can pick this up a little bit closer. I think this was a long time ago. So actually, it's about 1 day. It's about 1 day off. You actually got almost a better read on the daily, but it was 1 day off here. And this you can play, like from this point down to 179. If this is when day trading comes in, when you don't want to go long, but you don't mind going short. This is a nice little play in here. Now this is because the daily was below zero. Then you just want to look for the shorts. This is too late. If you do play it on the long side, no, and when these cross above zero, they will go up, but you have to know that they're only like 2 or 3 points. They're not going to be about 20 or 30 points. This was a nice little move in here from 167 down to the major trend line of 160. Okay, now that this is above zero here, then now you can play it on the upside. So this is going from 166 up to 178 when this crosses back over. Let's see how we did recently. Okay, recently we had this move right here on July 6th. This absolutely nailed the top right here. There was no give back, maybe half a point, and then it went from 190 down to 177. And you're good, like just you don't want to ride it up. You just take your 15 points and get out. And if you use a very short-term chart, you can see. Let's see if there's an entry right in here for the at 180 on the 15th. Let's go back to a 5-minute. Let me see here. Nope, you're not going to see it there, although you're going to get in a little bit earlier. Let's go to the 3-minute. 3-minute, you might get out if you didn't get out of the bottom, you're going to lose about 2 or 3 points. And I'm not sure I have like a tick chart without waiting for it. Okay, let's see what this is going to do. Okay, so on the tick chart, it nailed the bottom. So sometimes you have to look at a tick chart for exits. Okay, so before I wrap this up, I want to look at gold. Let's look at the spot price of gold, the electronic session, electronic and spot. And let's look at a 13, and again I'm gonna move this back to a 24-hour chart. See if we can see anything here. The only thing I see on the 13 is T3 right here and right here, and that was good for a 10-point move in a very short period of time. And then if you held it and held it and held it, then you would have replayed it, and long when T3 goes back above zero. So when you find a pattern like this, you stick to it until it doesn't work, and then you look for another wave that's more compatible with it. So you might get stopped out, like on the turns, looking for different waves, but that's fine. So you don't have to use like 30-point stops. You can use like smaller stops, because these are these tend to be more accurate. So you can keep it to a 10 point stop. But so far, this has gotten you in at 1320 and you're at 1340. And on spikes like that, I would just take spikes automatically. Just get out and wait for a new signal. Now, I wouldn't take this signal here on the downside because all these are up. Okay, let's look at this on a 987 chart and let's see if we see anything different. And this is nice for traders, for like medium, like during the day if you don't want to be in and out. So you take this from 1322 based on what you're seeing on this wave, using T1 at 1327. On the short side, covered 1316, and then on the long side from 1316 to 1338. And that's like a couple of day thing. Or if you're really obsessive about trading, then you can move to, let me see, gold. Let's see what the 144 looks like. Right here are some nice trades. 1345 on T2, right in here, right in here, and you're at 1342 down to 1336. Now, when you're using shorter time frames, then you're looking for shorter profits. You're looking for smaller gold point moves. For those of you, I'm turning back to a 55 tick chart on the ES for those of you who just absolutely love to trade. This is between 1316, which is 116, 117 on Friday, right into the close. And this is a 55 tick chart on the ES, and each one of these bars is 1 point. So again, the shorter the time frame, the shorter you're looking for. So if you're looking at if you're following this, let me get the arrow here. If you're following this right here, you're in here, point, you're out. And then just wait for the next move. And this is just using T1. You're in here, make a point, you're out. Or half, like cover half and then do a trailing stop. And if you do that, you're out about here, a little bit higher, or in concert when this goes below zero. Come down here, 1 point. Go up here, 1 point, 1.5 points. So over the last hour and a half of trading, you're actually in here also. We're talking about if you're just doing it for 1.5 points, 1, 2, 3, 4, 5 points in the last hour. So not bad. It wasn't even an active market, but that's what you can do with these waves with a very small time frame chart if you love trading, which a lot of us do. Okay, again, my name is Rodney, and I am a Triton Wave Consulting. Something that Brian McGowan said about these new trading tools that I'm using, the Triton Waves, that he's been familiar with for a few years, since they came out. I time gold and ES for private clients. If you want to get in touch with me, you can contact me at tritonwaveguy@gmail.com. Let's see here, and these are. I'm going to leave this up for you to read. I'm making this offer exclusively to experienced gold traders, but now I am including not only gold, but the ES. So it's good to be back doing these videos. I hope you enjoyed the new version of the Triton waves. Again, I'm going to be marketing them very shortly. If you're interested, drop me a line. Have a great week trading, and I will see you at the next update.